If you were to ask a billionaire, what is the number one skill you should develop in order to be successful in business? What do you think they would say? Leadership, sales, negotiation, just work harder? Well, guess what? You're going to love this. So check this out. I'm reading this book by Tillman Fertitta. He is the CEO of Landry's. He also owns 600 restaurants, casinos, and other business interests. Like I said, he's a billionaire, very successful. And his book is called Shut Up and Listen. All right. So I'm listening to this book as I'm running. That's what I do in the morning. That's my treat. So I'm running. I run 5 miles a few times a week, and I listen to these books or podcasts. And it just so happens that I'm listening to this book right now. And I found this very interesting theme. And the theme comes down to the number one skill. And in fact, he talks about it. Mark Cuban talks about it. And a variety of other successful entrepreneurs talk about this one skill. And guess what it is? Well, of course, we're on boosting your financial IQ. That's what I talk about all the time. But it solidifies what I'm talking about because in his book, Tillman says the number one skill is to know your numbers. In fact, he says when he goes into a business, he can tell within a matter of minutes whether or not they know what the heck they're doing just by asking them about their numbers. So I find this very interesting because I find the same thing is true when I go and work with companies. So when I go into a company and I sit with the CEO, and if you're listening to this, you're like, oh my gosh, I'll never have you in my business, Steve, because I don't know my numbers. Hey, don't worry. No shame. It doesn't matter where you're at. I always meet you where you're at. Okay, so that's just my little side note. But when I go into a business, I'll say, okay, how much revenue do you do? What's your gross margin? What's your customer acquisition costs? What's your lifetime value on your customers? I may also ask about what is your throughput, right? What's your cash flow? What's your current ratio? And a variety of other things pertaining to financial operations. But that's not it. There's financial and there's operational KPIs that are super critical to know in every business. So when it comes down to it, here's what I'm not saying. And Tillman is not saying the same thing. I'm not saying you need to be a nerd, all right, in the back office doing these debits and credits and, you know, every single account balance and so on and so forth. I'm not talking about that. I'm not even saying you have to know accounting and finance to the nth degree. Instead, you should just know your numbers enough so you can speak intelligently about your business. So check this out. Let's say I'm working with a client and they need help with their marketing. Right? Maybe their marketing or their sales efforts aren't producing the results that they want. Well, guess what? I'm going to ask them some questions. I'll say, number one, what's your customer acquisition cost? All right? How much does it cost to acquire a new customer? And then I'm going to compare that to the lifetime value of the customer. How much revenue is brought in from the customer, but even better is the lifetime gross profit of the customer. That's a better measure. Just LTV is very common out there. That's why I reference that. But I'll say, okay, let's look at your customer acquisition cost, your CAC, and compare that to your LTGP. And if your customer acquisition cost is 1 and your LTGP is 2, that means you're spending $1 and you're getting $2 back, which isn't super great. Instead, I prefer at least a 1-to-3 ratio. But let's just say you don't know these numbers. Well, you're just out there, you're spending all this money and you have no clue what your return is on your marketing spend. There's another metric called ROAS, return on ad spend. So if you're spending all this money on paid ads, but you don't know what the return is, then you're just blowing a bunch of money. When I was the CFO of another company, we were spending $1 million a month on marketing. And I could tell you at the time when I went into the company, they had no clue what these numbers were. Well, guess what? My team and I, we quickly put together KPIs and we started measuring this very important thing, and guess what? What gets measured gets managed. And just by measuring this and having it front and center, we were able to improve this ratio quite a bit. And for some companies that I work with, the ratio is like 1-to-8. In fact, there's a company that's like 1-to-15. It's crazy. Every $1 they spend, they get $15 in gross profit. And if that's the case, it's like dump the gasoline on the business because it will scale really quickly. Let's talk about throughput. I've talked about this in other episodes. This is the number one killer, especially if you are in the construction space or you're doing project-based work. So throughput is really critical. So throughput is calculated by the amount of gross profit or some variation thereof. You can do gross profit, You could do net operating profit. You could even do revenue if that's easier for you. But you do some type of metric as compared to some variation of time. So it's gross profit per hour, gross profit per day, gross profit per crew, or whatever it may be. And then you compare that to your operating expense per day or some other metric in your business. Let me illustrate this. Let's say you have two jobs. One job has a 50% profit margin, and the other job has a 30% profit margin. And let's say they're both worth $100,000, right? That's the contract value. Well, you may think that the job with a 50% margin is the better job to go after, where in fact, the job with a 30% gross profit margin is the better choice. Now you may be thinking, Steve, what the heck? You're crazy. I'm always going to pursue the work with a higher margin. Well, not so fast, because this is where throughput comes in. Think about time. What if the job that has a 50% margin takes you a month to do, compared to the job with a 30% margin, it takes you 1 week to do? With the same size crew and everything else equal, of course, you would want to get that money faster. That's called throughput. So in organizations, let's say they have a throughput of $100 per labor hour, but their operating expenses are $120 per labor hour. Well, guess what? If you keep doing work, and even if you're making $100 per hour, if your costs are $120, you're going to go out of business all day long. That's why knowing your numbers and understanding the story behind the numbers is so critical. Okay, so let's go back to Tillman's advice. He says the number one thing you can do is to boost your financial IQ. He didn't say those terms, but it's essentially increase your financial literacy so you can understand the numbers of your business. It doesn't matter if you're a business development manager. It doesn't matter if you're in sales. It doesn't matter if you are in charge of HR, right? Or maybe you're a COO or CEO or whatever position you're in. Maybe you're on the front line. Knowing your numbers is super critical, and that's your path forward towards success. Think about it. Let's say you're a frontline worker. Let's say you're a cashier at a grocery store. And imagine you know your numbers to the point where you say, look, my average transaction value is X amount of dollars, or here's my throughput. This is how many transactions I can complete on average per hour. I know that my average transaction value is this much. Do the math, bam. Now you know how much you are ringing up or selling per hour, and then you can extrapolate that and you know your numbers, right? So when I was working in public accounting, case in point, I was working at Ernst & Young, and I would talk to my colleagues quite a bit. I'd say, hey, what engagement are you on? And oftentimes I'd say, how's the engagement? You know, are the hours crappy? Like, is the client great to work with? Like, what's the office like? I'd ask all these questions. But then I would ask them, okay, so talk to me about their business. How are they capitalized? Do they have debt? Do they have equity? Where do they make their money? Like, what's their competitive advantage? Then I'd ask them, what's their profit margin? What does their free cash flow look like? And when I got into the questions about their finances, oftentimes they look at me blankly. And I'm like, you're auditing their books. You're looking at their income statement and their balance sheet and their statement of cash flows, and you don't even know these numbers. And it's not like they were dumb. It's not like they didn't know what they were doing. Of course, these are very smart people, but they were just so lost in the transactions of the business that they didn't step out, zoom out, and look at the bigger picture and understand the story behind the numbers. All right, so that's what Tillman's talking about when he goes into businesses. And trust me, as a billionaire, he knows what he's talking about. He's done this over and over again. And he's not a finance nerd. He's not an accounting person, but he knows his numbers in his business. That's what he's very proud of. And he emphasizes that in his book. He's like, I know my numbers. I can speak my numbers. I know exactly what to pinpoint. So I think that's really critical. So the second point is, he says, the biggest thing that causes most businesses to go out and to go under is not understanding the concept of working capital. Now, I've done other episodes about working capital. You could also check out other videos on my YouTube. I talk about working capital. In my course, Financial Pro, I get into the nitty-gritty of this because this is such a critical topic. So check this out. Most people in business, they can understand, here's my revenue, sales. Here are my expenses. Here's my profit. Great, thumbs up. But most people mistakenly believe, look, if we have profit, the business is doing well. But there's this demon that hides on the balance sheet called working capital. And just for simplicity's sake, there are a lot of nuances with this, but let's just keep it really simple. Working capital is the difference between current assets and current liabilities. If you take the delta between these two numbers, that's your working capital. If you compare that one period to the next, that's your change in working capital. So think about this. Let's look at one of the big components of current assets, which is accounts receivable. Let's say your customers owe you $1 million, all right? So they're sitting on your $1 million of cash. You don't have that in your business. You're waiting to collect that. And then let's look at a big current liability, which is accounts payable, what you owe your vendors. So you have $1 million that's being owed by customers, and let's say you owe your vendors $500,000. So the difference, $1 million minus $500,000 is $500,000. And that's how much is trapped in working capital. You're financing that somehow. You're financing that through retained earnings, through the profit of your business, through equity, or through a line of credit, or some variation thereof, all right? Now, that change, let's say the next month your customers now owe you $1.5 million because you just sent out a bunch of billings, you're not collecting on those invoices, and let's say your accounts payable remains the same at $500,000. Now, your working capital just grew to $1 million. If you don't have the line of credit or the equity or cash to absorb this change, guess what? You go out of business. Even though on your income statement you're showing profit, you haven't collected on those profits and therefore you run out of cash. So working capital is really, really critical to understand. Let me give you one more example. Let's say you're in business and you make a purse and you're like, this is the coolest purse in the world. It's gonna crush Louis Vuitton, and you're gonna go out there and you're gonna sell it in stores. And let's say the purse costs you $50 to make. So you go out and you market this to a bunch of stores, and one store says, hey, Steve, I love your purse, and I love your bald head too. It goes so well with your bald head, and we wanna buy 1,000 of these purses. Okay, these purses cost $50 to make, that's my cost, and they wanna order 1,000 of them to stock in their store. Well, guess what? I have to come up with $50,000 to make the purse, and then I'm gonna make the purse and I'm gonna ship it to them, and then they're gonna sell it in their stores and they're gonna pay me in 30 to 60 days. Well, guess what? I have to float that $50,000 for 30 to 60 days until I get paid from them. And so just compound this with other vendors. Let's say I go pick up more stores and I continue to grow my business. Well, it's great. I'm producing all of these purses and I'm in all these stores, but I have no cash because all my cash is tied up in working capital. So that's what Tillman points out in his book. I highly recommend the book. I think it's really engaging. I have it on 1.5 speed, so I'm almost through it just after a few runs, and I'm slow when I'm running. That's why I'm able to listen to 45 minutes of this book at a time at 1.5 speed. So it's really quick to get through. I highly recommend it, like I said. He just has a lot of principles, but I wanted to share that with you because I'm always talking about increasing your financial literacy. And it's great to hear these other successful billionaires. Like I said, with Tillman Fertitta and with Mark Cuban and others, they're all saying financial literacy. And I'm like, okay, I'm not crazy. I'm not crazy at all. This is a really important topic. Anyways, if you want to learn more about this, I have a free app at byfiq.com. You could download the app. You could take the starter course and then have other programs you could check out, especially the Financial Pro. This is a really important program, especially for those who are in the world of business, making financial decisions on behalf of their companies. All right, that's all I have. I hope you have a great week. And until next time, take care of yourself. Cheers.